Hi everyone, it's Bill Kennedy with the Global Interdependence Center. We're here in down East Maine at Camp Kotok with a week one contingent for Camp Kotok. Very excited to have everyone here just outside of Thomas Stream. And I'm joined today by a first-time camper, Byron Callan. Byron, welcome.
It's a pleasure to be here.
Yeah, it's great to
really
have
wonderful,
you.
Bill.
Yeah, so we had a great day fishing today, but Byron, just tell us a little bit about background and your firm and what you do.
So I'm an analyst and partner at Capital Alpha Partners. We're an independent Washington, D.C. based policy budget research firm. My background, I've been a sell-side analyst at Prudential and Merrill Lynch covering the aerospace defense sector. I was on the buy side at Perella Weinberg Partners, and I've been at Capital Alpha for the last 11, 12 years now.
So we're both recovering sell-side experts, as it might be.
We were talking about that in the canoe today.
So your specialty is really in the defense, the area of defense.
Right.
So we'd like to maybe just touch on a couple of questions which we've been talking about here at Camp Kotok. So obviously a shooting war taking place now in Ukraine with Russia's invasion, and a lot of chatter about what's happening in the Asia-Pacific region, specifically around Taiwan. So talk a little bit about what has happened to defense companies against the backdrop that we've seen a drawdown of U.S. defense weaponry in response to the war. What's the impact on the industry?
Well, I think the first thing to call out here is, this war is already 150 days. And in the context of major conventional wars, not the guerrilla wars or the insurgencies we saw in Afghanistan or Iraq or Vietnam, this is now coming up to probably the third longest running conflict since World War II. And I think people sometimes forget that it was front page news back in February or March, now it's kind of in the background. And you've seen really pretty horrific casualties on both the Russian side and the Ukrainian side. To your point, Bill, the West has been supplying Ukrainians with kit to replace some of the stuff that they've lost. It started out with kind of Russian stuff that they pulled out of Eastern European countries and went to NATO standard equipment. Now we see more sophisticated equipment like the HIMARS artillery system. I think for the defense contractors themselves, they really haven't seen the demand pull yet. They have to walk through a budget cycle. Stocks, depending on where you look around the world, have done very well, kind of in anticipation of that demand pull. It's probably really going to come in 2023 through 2025. And I was in London at the Farmer Air Show, 3 weeks ago, and I think people are pretty convinced that this cycle's real, that this is not a head fake, that there's really going to see change in the geopolitical environment, that the defense spending increases are probably real this time, particularly in Europe.
That's interesting. So the statement about higher defense spending, we should not just look through a U.S. lens, but that's definitely a European lens as well.
Some of the best performing stocks this year have been basically the European defense pure plays, particularly in Germany. But the other interesting thing, the Koreans have done very well. There are listed companies in Korea that have performed quite well. And India is the other one, because India had been a pretty big importer of Russian equipment. With the sanctions and the export controls that have been laid on, they've kind of turned to their own domestic industry. So that's another group. There are listed in defense contractors that have done very well too. So we're at that point where, the market's responded to something, but you really haven't seen the numbers come in yet for where specifically. I won't say completely, there have been some changes, but it's a long cycle business. It's going to take a while for this to kind of play through.
So your firm, based in Washington, D.C., you're talking to globally institutional investors, hedge funds, private equity funds, but also corporations, and giving them guidance. How are you advising your clients about the trajectory of the Ukraine war?
Well, I think right now it's a hard call. No one really knows how this is going to end per se, but I think, our core position is this is going to go on for a while. At least into 2023, there have been some statements that the Ukrainians have made about how long it's going to take to train troops. And as much as you had some really unprecedented sanctions and export controls placed on Russia, their economy hasn't been brought to its knees yet. And they're a learning organization, they're military. So there's this back and forth where I think we're stalemated, and I kind of think of this as we'll cross the bridge in 2023 to see which way this conflict goes. But it's not, as I made the point earlier, like Desert Storm, 1991, and with the Iraq, after the Iraq invasion of Kuwait, that lasted around 40 days. We're up to 150 days right now. So I wouldn't be surprised if we go to at least a year and a half on this. And as I said, I don't know what the outcome will be, but I doubt it's going to be an outright, Ukrainian offensive that'll sweep all the Russians out of Ukraine. To the same degree, I think it's going to be unlikely that Russia will cause the collapse and completely overrun Ukraine. There'll be a settlement at some point, but put it out there. And in the meantime, I think as long as Russia is perceived as a defense threat to Europe, again, it's just something that has fundamentally changed. You mentioned China, we can get to that in a second too, but that's something else that obviously has been quite topical.
Okay, so Byron, let's talk about the Asia Pacific theater.
Right.
What are the companies saying about Taiwan, Nancy Pelosi's visit earlier this week? How do you see that unfolding?
Well, I don't think, the Department of Defense has been very clear that China's been the pacing threat. And that's really what's been driving a lot of U.S. defense spending and the changes and the kinds of things that the U.S. is buying. It's obviously been a factor in not just Taiwan, but in Japanese defense spending plans as well, too. The whole AUKUS deal with Australia, the United States, and the UK is part of the same broader change in China. I don't think the Pelosi visit is an inflection point in defense spending expectations. I mean, I think there was always a backstop there that this is a military contingency that has gotten a lot of attention and focus as China has modernized their military. But the Pelosi visit in and of itself, I don't think anybody's going to be changing defense sales expectations or earnings expectations. I think we kind of knew that this was percolating for a while, and one visit by one senior person from the U.S. isn't going to change that for the worse. I don't think there's always a risk, but
Take 45 seconds. Tell the audience about AUKUS. What is AUKUS?
AUKUS is the Australia, US, UK. It was an agreement that was announced, I guess, last year. The Australians had bought a nuclear submarine from the French. They opted instead to work with the US and the UK on a transfer of nuclear submarine technology. It's a pretty significant change when you think about it's not nuclear weapons, but a nuclear-powered submarine is far more capable than a conventional submarine and gives Australia the capability eventually to really put submarines much further north and much closer to China.
Understood. So it sounds like, to summarize, the European theater, Ukraine, Russia, we've got some time ahead of us still, maybe 2023, maybe 2024, time will tell. We're not quite certain. Still a lot of uncertainty of the outcome in Taiwan and China and what might happen there. What do you think is not priced into the market right now? When you look at credit, corporate credits, or when you look at the equity markets or the currency markets, what do you think the biggest surprise could be?
Well, the bigger changes to me are this is a giant rock that was dropped into a lake, since we're sitting in the lake, right? And it's these ripples beyond not just defense spending, but what's the outlook for energy? What happens to commodities prices in general? The labor shortages that we've seen have cropped up across the sector of the United States, they're being keenly felt in the defense sector as I start thinking about these increases in the people they have to hire. So I think it's really interesting from a defense standpoint how these companies are going to manage through higher defense spending, where they can get the people, the engineering talent, the machinists, and that to me it's nice to put numbers in an Excel spreadsheet and say, here's where the budgets are going, but can companies actually execute and do that work? And I think that's going to be a very important factor for people to look at differentiating outcomes and what some of this defense spending will be.
Terrific. Good. Byron, thank you very much. We look forward to you coming back for your second trip to Camp Kotok. Really appreciate your insight and you being here, and thanks for your time.
Well, it's a pleasure, Bill. I'm really glad it's not raining.
Yeah, absolutely. Thank you.
Okay.
Thank you.
Good.